And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, powering Africa's potential from ground to grid. Proud sponsor of the Africa Energy Forum 2025. Good evening. Welcome to The Money Show tonight on a day dominated, of course, by Israel's attacks on Iran. There'll be a big conversation, which is sort of outside the knowledge of this program, about why this happened, why it happened now. The claims that Iran does have a sort of nuclear weapons program. Iran has, I must just say, consistently denied that. And then you've got the US President Donald Trump sort of tweeting and saying, well, essentially that Iran should agree to a deal now. And of course, it was the Americans who pulled out of a deal, and it was the Trump administration that pulled out of a deal that had already been signed. But for our purposes, the real story is around what's happening on the markets. And of course, most markets down, pushing gold and oil up, and all of that having a really big impact, as you can imagine. I suspect, though, that this will dominate conversation for the next few days. It really does depend on what happens over the weekend. That is actually going to lead to whether, how markets react. International markets on Monday, our markets on Tuesday is the start of a long weekend. I was interested in a story on Fin24 and MoneyWeb, both reporting today about Azra. They're the part owners of the Four Ways Mall. They've been forced into business rescue. There was a ruling in, I'm not entirely sure why, but the Free State High Court, maybe the company is headquartered there, in a case brought by First Rand and Investec. Azra owes them $2.3 billion, 2.3 billion rand, They haven't been able to pay it back. And part of that, I think, is because Four Ways Mall just seems to have disappointed. Now, I understand it's better than it was, but it just takes you to a conversation around the science of shopping malls. You may have a few shopping malls, a few shopping centres near you. I don't know if you always go to the closest one, or if you go to the one with the best parking lot, or the one that's sort of second closest because they have that nice something, or because they have a Woolies, or because they don't have a Woolies, or whatever the reason is. But I do wonder about the science of shopping malls. If you consider the market around Four Ways, there's really no reason why a very big shopping centre there shouldn't be full. But that hasn't been the case with this mall. Be interested in your experiences. Maybe it's the parking. By my count, I think they've got the third worst parking lot in Johannesburg. 011 883 0702 021 446 0567. And of course, voice notes tonight on 072 702 1702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, world markets and, of course, the JSE all badly affected by Israel's attack on Iran overnight. Israeli warplanes targeting what they say are nuclear weapons sites and senior military leaders. Iran denying trying to create nuclear weapons. That's pushed oil prices up dramatically, gold prices up too. The rand weakening slightly against the dollar. Hywel George is Director of Investments at the Old Mutual Investment Group. Hywel, good evening. I'm sure it's been a long day, so I really appreciate the time. Most global stocks are lower, oil prices are higher, gold is higher. Is this typical of the kind of reaction we see when something happens, particularly in the Middle East?
Good evening, Stephen. Good evening to your listeners. It is fairly typical. And I would say it's been a fairly muted reaction so far, in fact. I mean, oil started the day up 12%. It settled up kind of 5 or 6%. US came off about 1 or 2%. It's now down less than 1%. And so far the markets are saying this is clearly concerning. And whenever anything happens between particularly Iran and Israel in the Middle East, it is always concerning and there's tension around it. But so far, given the relative position of Iran, particularly in terms of strength in the region where it has been weakened quite considerably already, it's less pronounced, perhaps, than it might have been even a couple of years ago.
Is that maybe, this is a strange question, but because there's been so many other elements of volatility recently, particularly the behavior of the Trump administration, that maybe sort of as a factor, what happens around Iran and Israel just isn't as important as it was. Then it would have been the kind of dominant factor. Now there are many others to contend with.
Yes, and perhaps we are suffering from event fatigue. That could certainly be the case. It certainly feels that way sometimes. But I do think, this was from Israel's point of view, and probably an opportune time for them to strike on Iran. Partly because, given their strikes some months ago, the Iranian air defenses and retaliatory missile strikes have been severely weakened. And also the Iranian proxies, in terms of Hamas, Hezbollah, and the Houthis, have also been weakened, given Israeli actions. And so I do think it's the relative weakness, if I can put it that way, of Iran in this play, where they can't strike back too strongly because they just don't really have that capability right now.
The big risk to markets, well, there's several big risks to markets. The one is some surprise Iranian reaction that's perhaps more dangerous to Israel than we currently expect, and the one you point to. The other is if the US is pulled in somehow, or we see attacks on shipping, US and otherwise, in the Straits there, where I think 20% of global shipping and oil shipments in particular go through. I mean, I presume markets will be looking at all of those factors and would react very badly if the US, for example, was pulled in somehow.
Yes, that's absolutely correct. And certainly one of the worst case scenarios would be Iran striking some form of US military capability. And the US does have 40,000 troops based in the Middle East, with a lot of them based in the US military bases in Bahrain and in Qatar. And if Iran chose to strike those bases, that would be a massive escalation. And you would see a massive retaliation by America on Iran, which is probably why Iran are not going to do that. But if they were to do that and the US was drawn in, yes, that would make this a very, very different story.
This also comes when OPEC Plus has been battling to keep discipline among its members. One or two of them have been opening the taps, it seems. I mean, there's always a little bit of that from my understanding. But oil prices have been a little bit lower than they were. And of course, this has all sorts of other complications around shale production in the United States, which is, of course, much higher than it was, say, 10 years ago. But is that why, oil prices went up dramatically, 14% at one point, but then came back quite quickly?
Yes, that's right. And OPEC Plus actually are putting through a production increase as we speak from a recent agreement. So that's certainly having an effect. The US shale revolution of the last decade or so continues to have an effect on the oil market, given the US went from 2 or 3 million barrels a day to a peak of 12 million barrels a day, which is actually more than Saudi Arabia, which used to be the largest producer. So there is more oil around. And so that's clearly having a depressing effect on the oil price. And so, that'll put a dampening effect in any sense in terms of the strategic view of oil, as opposed to what I might call the tactical view in the short term, given these events.
Normally in situations like this, people look for safe havens. There's some obvious places, Switzerland, for example. But the dollar was always seen as a safe haven. The dollar has, over the last few weeks and maybe the last 2 months, been losing value against other currencies. There's been a lot of commentary about this. Does it still qualify as safe haven right now?
Yes, there's certainly a question mark over that and has been for a little while, but particularly, dare I say, since President Trump became president again. And this is one of the consequences, probably foreseen consequence around the tariff policy and the event fatigue we're seeing in terms of the amount of news flow coming out and the uncertainty it's causing amongst non-US countries. And that's undermining some confidence in the US dollar. I don't think there's any doubt about that. And today, the US dollar bounced to like 0.5% and then came back. And so whilst gold went up and obviously oil went up, so the US dollar as a safe haven is losing its luster. That is for sure. And it's down about 10% probably so far this year. And we could see some further structural weakness in the US dollar.
Hywel George, I really appreciate the time. Thank you. Director of Investments at the Old Mutual Investment Group. Well, obviously, the story that most business people will be watching over the weekend, the situation around Israel and Iran.
7:02. Stephen is on The Money Show.
6 to 8 p.m.
Still much speculation about if, maybe just when, the Finance Minister Enoch Godongwana, and I presume in conjunction with the Reserve Bank, will announce that South Africa will have a lower inflation target. At the moment, as you know, the band is between 3 and 6%. There have been some suggestions that the SARB could get a target of around 3%, and it would be a hard target rather than a band. Reza Ismail is the head of bonds at Prescient Investment Management. Reza, good evening. We can obviously see that inflation is low at the moment. If we look at administered prices, there are some indications that perhaps inflation will start to rise soon. Could our window of opportunity to do this be closing a little bit?
Hi, good evening, and very happy to be part of the show. I think it is a particularly opportune time to basically effect something that has been in the works, and there's been a considerable amount of dialogue around this for quite some time. But as you alluded to in your preamble, our realized inflation, in the last while has been considerably benign. And that, coupled with the fact that we sort of are in the midst of a rate cutting cycle, we can argue about how deep that basically is, but factually we are part of a rate cutting cycle now with regards to the South African Reserve Bank. And so when you add those two things together, it is quite a cheap time to be wanting to sort of move to a lower sort of equilibrium inflation target. So I do think that it's quite a good time to do that. And I think if you listen to the communication coming from the governor himself, I think it's fairly unambiguous, and I think we will move towards a point estimate, a point target of 3% before long. I'm fairly certain of that.
I mean, certainly it does feel like that. There hasn't been any widespread consultation yet, but it does feel like that. What does a 3% target do to bond yields and investor sentiment? And every time this is discussed publicly by someone in authority, we see the rand strengthen a little bit.
Yes. That is right. So we can talk about, we can sort of split out the effects. So let's basically talk about the effect on the short end of the yield curve, right? So those are sort of short-term deposit, money market rates and their proxies. And they generally move sort of in lockstep with the policy directions. Let's just say interest rates are due to be cut. You'll generally find a compression or yields lurching lower in the front end of the yield curve, and conversely, when there are expectations of rates being hiked, you will see the front end of the yield curve sort of selling off, right? So that's on the front end. So in this particular context, given that we are in the midst of a cutting cycle, and the proposal now is that we move to a lower inflation target, the idea then would be is that we don't get too much of a pronounced cutting cycle. In other words, whatever ostensibly would have been the depth of the cutting cycle, it will not now be as deep ostensibly, right? So it means that the front end stays relatively higher for, let's call it the modeling framework, the modeling window. So that's on the front end. But much more consequentially, what it actually does to the back end of the yield curve, in other words, bonds with maturities of 10, 15, and 20 years out, is that what is much more important for those yields is what are a country's equilibrium inflation expectations. That sounds like a mouthful, but it's basically what market participants are pricing in for inflation over the long term. Now, what will happen is that currently the bond yields are embedding inflation of around 4.5%, and the governor and the SARB has skillfully guided inflation expectations towards that mark. Should it now be the case that the 3% target is adopted and bond yields have already started to lurch lower, then equilibrium inflation expectations will drift lower at the back end, meaning you will have lower back end bond yields. Now that comes with a range of benefits. The marginal cost of debt basically goes lower, and also it does raise now the prospect of South Africa being able to raise different forms of debt, specifically debt from the inflation-linked market becomes a much more attractive option under a lower inflation regime.
Okay, so to sum that all up, over the longer term, this is very, very good.
This is very, very good, right? Yeah. So
okay.
This is very good, yeah. So right, but however, I would say the proposal is, of course, like many other things in the financial world, the proposal is not without its detractors, right? Those that think that this is a terrible idea, right?
No, and I mean, part of it is you need higher interest rates, and what does that do for growth?
Right. So generally, that is the most common barb that is basically hurled towards this idea. That essentially, what would that mean for aggregate demand and for output and for real growth, right? So in economic terms, usually, and these terms are also cited in the working paper that accompanied the announcement by the governor. Usually we speak of something called the sacrifice ratio. So what that really means is that, let's just say, the policy rate was at some equilibrium neutral level. What amount of aggregate demand or what amount of growth do you sacrifice Should you want to move to a higher interest rate regime, right? So if interest rates move higher, ostensibly to combat inflation, what amount of growth are you sacrificing? So commonly termed the sacrifice ratio. But the econometric evidence basically says that that argument is not really a very pointed one, right? Because the policy stance is only but one variable that actually determines aggregate demand. So, for example, you could have very, very low or very, very accommodative, policy rates. But there could be other things like, for example, the policy uncertainty in other spheres. There could be uncertainty around logistics or electricity supply or a range of things or the general political climate. So all of those things, are hurdles that could scupper aggregate demand. And it has been found, and the research suggests that we actually don't sit with a very punitive sacrifice ratio. In other words, it's a very long-winded way of saying that should we now have not a very, very pronounced cutting cycle, should rates stay a little bit higher for a little bit longer, the effect on aggregate demand would actually not be very, very pronounced. In other words, you don't really get a massive hit to aggregate demand. Should basically we start to endeavour towards 3% inflation.
I saw Kevin Lings from Stanlib. I'm sure you know him, Reza. He was speaking this week, and he made the point that a low inflation target only works if the bank is able to hit it. And at the moment, the band, the SARB gets the band between 3 and 6% around 75% of the time. Now, there are all sorts of consequences that flow from that. And the one is the kind of confidence that they'll do it. That affects inflation expectations.
Yes.
How important is it to set a target that you will actually hit?
Yeah, so, I mean, I think, so that is very important. But I think that, I mean, if one were to offer an assessment of the South African Reserve Bank, I think that has almost been one of the bastions of excellence that we have, and they've got a massive amount of, let's call it, institutional credibility. And if we just cast our minds back to the last time that we actually had a downgrade, I mean, the dark days of sort of March 2020, when we were staring down the barrel of a level 5 sort of lockdown in COVID, then what Moody's actually communicated, to the broader market was that in the face of the question, why have you taken so long to actually downgrade South Africa when the writing was on the wall with regards to growth? They answered that because we've got such a high stockpile of institutional credibility, particularly from your Reserve Bank, right? So it's fairly beyond debate, and it's fairly beyond question that the SARB does enjoy, a heap of international credibility with regards to their reaction function in the conduct of monetary policy. And if we in fact look at almost the precursor to the 3% inflation point estimate, around 2017, you'd remember that the governor skillfully guided the market towards 4.5% without a very, very punitive hiking cycle. Now, you can only do such a thing. You can only do that if the market believes in your credibility as being able to control inflation. Now, I'm not a big fan of citing hit rates. In other words, citing a statistic which relates to the frequency with which you manage to keep, because it doesn't actually tell you which crises were experienced along the way, and there are many things which make it sort of like an atypical business cycle comparison to be including in that sample of frequency things like the COVID shock or for example, so things like that actually clouds the issue, right? And so I'm not really a big fan of quoting statistics like that. But what I can say, and what is, to my earlier point, what I can say and what is fairly agreed upon is that the SARB does enjoy a fair amount of sort of institutional credibility.
Reza Ismail, we could go on forever. It's so interesting. Thank you. Head of Bonds at Prescient Investment Management.
The Money Show.
The Markets.
Grant Nader is Portfolio Manager at Benguela Global Fund Managers. Grant, good evening. Obviously, Israel's attacks against Iran really, I suppose, the dominant factor in markets here and around the world today.
Yeah, definitely. I mean, we came in this morning, the reactions were a lot more extreme at the start of the day, and there was some clawback of some of the lost ground through the day, including in the rand and some of the retailers and the banks, the South African financials that were hit quite hard. So there was a bit of optimism clawing back into the market, but on the balance, still quite a negative impact.
I mean, depends on what happens over the weekend. By Tuesday, if nothing happens, could sort of the shock will recede. If something very bad happens, it'll all be very different.
Yeah, it's amazing how these things always happen over weekends when you're sort of going through the weekend, not sure quite how to position. But, over time, I've been in the market many, many years, and it's not yet paid to overreact to an event like this. It may at one point, but I don't think we've seen it yet.
There's been a fascinating trend over the last few days. Woolworths, the Foschini Group, Mr. Price to an extent, all of them, but particularly today, Woolies and the Foschini Group down, 4.5%. And that's been consistent over the last few days. And yet their results recently, particularly Mr. Price and the Foschini Group, are very strong. I don't quite know how to understand what's happening to them.
Yeah, I mean, some of it is a bit of a head-scratcher, and not only were the results decent, the post-result trade was also described as pretty decent. So I think what's happening there's a little bit of concern around the growth that's been downgraded in SA, and perhaps the likelihood of, if you think in today's world, the oil price going up, the rand weakening, that's changing the inflation outlook, so maybe the rate cuts don't come. So those could be contributing factors. But also, I think it looked to me like a program selling. So you sometimes get these large foreign or local funds institutions that sell over a number of days en masse. And that's the kind of price action that was across the sector that it looked like it was happening to me.
Grant Nader, thanks so much from Benguela, Portfolio Manager, Benguela Global Fund Managers. Really appreciate the time.
Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far, with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
17 minutes to 7 the time. Strange things happen and you end up in interesting conversations. And I was talking to a colleague of mine in an office I work in today, and she spent some of her Friday on this. She was lamenting the fact that she's used to buying a slice of cake from a particular supermarket chain. And then she said, do you know that slice of cake is now 80 Rand? And this kind of came to dominate her Friday because on the one side, she wanted what she'd always had, but she could not justify to herself the cost. Now, wonder, with all sorts of things going on around, food prices, eggs, at some point eggs are cheaper now than they used to be, whether you have come across a few things that actually you feel you have to cut back on because you just can't justify it to yourself anymore. You get to a point where you think, well, it was nice while it lasted, but now I just can't justify it. Those small treats, and each small treat that you consume employs someone somewhere along the way, more than someone, many people at times. I just wonder if you've had that experience as well. 011 883 0702 021 446 0567.
The Money Show.
The Friday File.
The Friday File.
Well, there was an announcement from the music measurement organization Billboard, and they started as a magazine. They've really, I don't think there's any organization that's been tracking music for longer. In fact, I'm sure of it. But they appointed Nkosiyati Yati Khumalo as the new editor-in-chief of Billboard Africa. Comes during an interesting time for the music industry. I'm certain there's more music around than ever before. Sort of music output is growing. Music in terms of music consumption, the number of people who are listening to it, I'm not sure if that's as big necessarily. It's not moving as quickly. Nkosiyati Yati Khumalo is the editor-in-chief of Billboard Africa. Nkosiyati, good evening and welcome, and congratulations on your new appointment.
Good evening, thank you, and thank you so much for having me this evening.
Where do you see Africa's place in the Billboard organization? I mean, how important is the music of our continent right now? And I think of something like Amapiano, for example, which I think it would have been harder to take over the world before streaming services.
I think that's partially correct. I think it's a hugely important territory for, of course, Billboard, but I think for the music ecosystem overall, not just across the continent, but really globally. And it's so exciting to see how much of an uptick there is in terms of interest, in terms of just listenership from around the world, and pouring out not just from African diaspora markets and communities, but just kind of general communities around the world. And that's so exciting to see. It's so organic, it's so natural, and it's based completely on the talent and the the artistry that is in the music, not by any kind of paid campaigns or anything like that. It's really beautiful to see that, and I think it's so exciting from both a creative aspect and a cultural aspect, but also a commercial one for the artists, for the music industry ecosystem across the continent as well.
There was a time, music carries cultures with it, right? And, there was a time not that long ago, let me just say for argument's sake, the 1980s, I could probably have listened to the opening bars or the opening beat of a song and kind of known where it came from, which part of the world it came from. I think that's changed dramatically over the last 40 or 50 years. And maybe what that tells us is that that there are many more influences on music. So you can be almost anywhere, and there'll be a lot more influences than you would have had in the past. And that leads to a lot more, I suppose, combined genres.
Absolutely, yes. I think one of the exciting things about that is that African music in particular is unique in the world landscape. I think it's instantly recognizable by its kind of warmth and energy and kind of good vibes, if you will. I think that's hard to replicate. And I think especially now over the last few years when we've come obviously out of a global pandemic that was devastating for everybody in some way, shape, or form. And I think kind of using African music as almost a refuge in terms of dealing with that and coping with that and finding joy again in and amidst those moments, I think is also a big contributor to how African music has grown globally, because those vibes are irresistible, and uplifting, and you can enjoy it. It doesn't really matter what language the lyrics might be in. It doesn't really matter what the BPM might be per se, but you can feel those kind of that spirit of the music and the warmth in that we know is true for African creators across the industry and across various industries. There's a kind of uniqueness in what they do, and that's irresistible at home and it's irresistible abroad. So you'll be able to kind of hear those influences, and you hear artists from around the world starting to collaborate even more with African artists to capture that vibe, to take a part of it, to really celebrate it. It's been so interesting to see collaborations between African artists and artists based in the UK and the US, and to see these collaborations go insanely viral and on social platforms and on streaming platforms. It's fascinating, and it's just because like the kids say, those vibes are immaculate.
Yeah. Sometimes it can be forced. There was, I forget the name now, you obviously know a lot more about music than I do, but the 2010 Football World Cup song, when we hosted the tournament here with Shakira, and that good song, freshly, the South African band and the musicians that performed with are great. Always a little forced to me, but now from what you're saying, there's a lot more natural collaboration. People are seeking each other out.
Completely, and that's an exciting, for me that's just so fascinating and exciting. People are seeking each other out across the continent as well. So I think artists and artist communities and kind of those forward-thinking artists especially are finding those common grounds amongst themselves. I think of Davido as an example, an Afrobeats legend from Nigeria, who is in South Africa more often than I think I am at this point. And he's working with South African producers, he's working with South African vocalists, because he just loves the Amapiano sound, as an example. And creating fusions of that with his own sound is fantastic. That kind of erases borders in a sense, and it helps us find that common ground, both culturally, commercially, and musically as well. That's so exciting to see that, and the power that has to translate in a stadium in London that can get sold out, with the performance with him and South African artists, as just two examples of that. But there's so many collaborations like that are happening, both here at home on the continent and abroad, and that's just a natural kind of hunger for each, that the artists have to create something new, and to identify what lies in common between them and celebrate that, rather than kind of use it as a point of division.
There are many factors that lead to certain genres or certain types of music being popular. Sometimes, something as simple as a movie, it can be organic, there can be a particular superstar that can then propel music or whatever. But there can be economic factors, that's happened in the past. There can also be technological factors. So when you first had gramophones and records, you needed a really clear, strong voice. Think a voice like Elvis to do well. Bing Crosby, who was a crooner, for those with very long memories, he couldn't really do what he did until the invention, we think in Nazi Germany, but we're not sure, of audio tape. He actually, as I understand the history, sponsored the sort of final research into audio tape, because Otherwise, he would have to do all of his performances on live radio, and he didn't want to do that through the summer. Strange how these things happen. With streaming, one of the things that I understand may be happening is that if you want to get your music included in as many playlists as possible or played as often as possible, you're looking for something that's a bit backgroundy, that can be played in a coffee shop with a very diverse audience, that could also be played in a doctor's waiting room or something. And I wonder if the fact that we now use streaming more than kind of seeking out paid-for music in the form in which I used to go and buy a CD, I'd look for a particular band and buy it, is changing the music that's being created.
It's an interesting point. I think, I don't know if it's changing the way the music is created. I think it's changing certainly some of the dynamics when it comes to music distribution and the role of kind of a big label or a big distributor. And how they even choose to sign new talent. I think it's a fantastic tool for kind of music discovery, and not just streaming, but also kind of social media. I mean, TikTok is huge in terms of music discovery and helping people identify kind of new sounds and trending sounds and anything like that globally. I think in the streaming case, I think it's also fantastic for music discovery in that way. And I think it's a great tool to be able to show you kind of things that maybe you didn't know that you'd enjoy. Sometimes in a passive way, yes, but I think a lot of a great strength of some of the DSPs, the digital streaming providers, is that they're very intentional about curating some of those experiences to make sure that, you'll find new things. And I think artists are certainly taking advantage of that. I mean, especially in the Amapiano community, as an example, they often use YouTube to build communities and share their music there almost for free at first before translating it or uploading it to traditional DSPs. And that's fantastic because by the time it's on a streaming service like Spotify or like an Apple Music, there's a community there already built in. There's a fan club already built in. There are people who are ready to hit play and take that music off of a video screen and into their cars and into clubs and things like that. So I think it's a fantastic tool to be able to kind of expand the audiences of these artists, and also to take them, again, across borders. Communities in Germany and Poland, and we're seeing artists like that pop up in those countries who want to produce on the piano.
Yeah.
And
which is astonishing. On many levels, yeah.
It's astonishing, but how could you even predict that? You'd never know unless a streaming platform, as an example, could be that bridge between artists and new community and new audiences worldwide.
Nkosiyati, fascinating talking to you. Thank you. So many more questions to ask. Nkosiyati Yati Khumalo is the editor-in-chief of Billboard Africa. How do you listen to music nowadays?
702 with Stephen Grootes.
Email him on stephen@702.co.za.
Time for the Friday Biz Blitz. You know how this works. We put out a question. You phone us on 011 883 0702 021 446 0567. If you get it right, we move on to the next question. If you get it wrong, we move on to the next caller. First question for you on the Friday Biz Blitz. What American music brand magazine has become the global standard for ranking songs and albums? Which American music brand magazine has become the global standard for ranking songs and albums? You think of a list of songs, the big sellers, almost automatically, what is it called? 011 883 0702 021 446 0567.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, proud sponsor of the Africa Energy Forum 2025.
First question on the Friday Biz Blitz this evening, 011 883 0702 021 446 0567. Which American music magazine has become the global standard for ranking songs and albums that influences artists' earnings, endorsement deals, and concert sales? It's become a massive, big name over the years, has its roots back, I think, in the 1890s. And, of course, we've been talking about the music business. We've got questions, too, around one of our shapeshifters that we spoke to this week, and also around changes in the car industry. But the first question, which American music magazine has become the global standard for ranking songs and albums, often influencing artist earnings, endorsement deals, and concert sales? There's, of course, so much history to all of this, but it'd be good to hear your answer to that question tonight on 011 883 0702 and 021 446 0567. We have questions too around Jamie Dimon and the role that he plays in the international economy, and we'll talk about the lottery as well. So some questions coming up for you on the Friday Biz Blitz this evening. As you know, there are lots going on in the music industry at the moment and lots of different changes that have been happening. So first question for you tonight: which American music magazine has become the global standard for ranking songs and albums? And the numbers, 011 883 0702 and 021 446 0567, is of course ahead of a long weekend, so you might well be sorting out your playlist for the weekend. Have a road trip, you may already sort of be on it. You may be planning it for tomorrow, but you may well be looking at some of the suggestions from this institution, which does, as I understand it, has created many, many suggestions for listeners over the years. So lots to consider when it comes to music for the weekend. But which American music magazine has become the global standard for ranking songs and albums over the years? 011 883 0702 and 021 446 0567. Let's go to Nigel in Rosebank. Nigel, hi.
Mandla.
Sorry?
It's Mandla.
Oh, Mandla. I do apologize. Mandla, good evening. Do you know the answer?
Billboard.
It is Billboard, yes indeed. Okay, time for the second question here on the Friday Biz Blitz. Which South African businessman, anti-apartheid activist, and former Robben Island prisoner went on to lead major companies like Liberty, Vodacom, VW, and Safika Holdings?
Saki Makozo.
Indeed, Nigel, yes, you are correct. Okay, third question. In the car manufacturing sector, what does EV stand for?
Electric vehicle.
Electric vehicle, yes. Okay, Nigel, I think this is going to be the last one we have time for. Jamie Dimon, D-I-M-O-N, Jamie Dimon is the CEO of which Wall Street bank? It's a massive, massive, massive institution.
Yes. JP Morgan.
It is JP Morgan, yes. Nigel, congratulations. It's you are Jamie Morgan. You got all the questions right tonight on the Friday Biz Blitz.
Thank you.
Mandla in Rosebank, congratulations to you. I called him Nigel because it said that in front of me. My apologies, I should know better. But Mandla in Rosebank is our winner tonight on the Friday Biz Blitz. Good evening, it's 7 o'clock.